Let me welcome on the show Amrish Baliga, independent market analyst, to talk more about this. Amrish, looking at this particular structure, and of course the demerger was very, very closely watched out for, there have been several questions that have been raised in the investor call, and we can really address and talk about that. But to begin with, what is your view when we talk about this demerger process and your view on Religare Enterprises with this restructuring?
See, typically, whenever a demerger happens, normally it adds value to the shareholders. Now, let's take this example of Care Health Insurance. The market valuation should be in the region of about 20,000 crores. I mean, there are figures which are coming out at 17,000 crores, and there are a few figures coming at 23,000 crores. So I've taken the middle level, which is about 20,000 crores. Religare, holds 63% of this. So the valuation as far as Religare is concerned is about 12,500 crores. And they also have like the broking and the NBFC business in Religare, which is worth about 3,000 crores. So totally 15,000 crores should be the value. But it's quoting at half that value. Look at the look at the market cap is about 7,350 crores. So this normally happens when there's a holding company with multiple investments. Now that we will have the broking and the NBFC business listed separately, I expect that to at least quote closer to the intrinsic value, which is about 3,000 crores. And the health insurance, which is going to the holding company, and we should remember that that will be the sole investment. So a sole investment in a holding company should not get a similar discounting which other holding companies get because they have multiple investments. So even there, I see the holding company discount reducing. So overall, I think it should add value to shareholders.
Just one question, Amrish, on the question of Care not being merged with the holding company.
Like one of the options, going ahead clearly is to merge the insurance business into the holding company. But then it is easier said than done. I mean, there are a lot of restrictions to merge insurance subsidiary into a non-insurance holding company. But like I said, since there is no other investment or activity in the holding company, that possibility remains. But again, it is subject to IRDI approval. Because if you go back to 2015-16, there was a proposed merger of Max Life, which was the insurer with Max Life Financial Services, and that had to be called off because IRDA did not approve it. Now, assuming that going ahead,
Sure.
if the merger is allowed,
Yes.
I mean, the question is, will the existing external shareholders of Care agree
Yes.
to stop with the holding company?